Alrighty, we are live. Hello, everyone. Hello. We have just wrapped up an incredible week. Such an incredible week. Hope you guys had a positive week this week in the markets. It surely has been a great week for me, myself. Count is nicely in the positive for the week. Great trading. And let's go and have a look. Ooh. Right. We're going to obviously get started in just a moment, guys. To start looking at just a bit of a recap of what happened with the markets today, guys. And we'll be able to see what's going on with everything going out through there and some things we can keep an eye out for. Because I think, or I know, there's some really exciting things coming up for you guys as well too. So anyway, guys, if you haven't done so yet, guys, if you actually do just need some free help, then go to johnsfreegift.com and grab access to that free trading course. There's about, as you can see, all the different videos there. You can see. And I promise you guys, study that free trading course. Even if you don't do any business with me, with my actual coaching program itself, I promise you that free trading course will set you on the right path. If you are interested in actually talking to me, guys, then I have one spot left open for that super trader formula that I've been running. And so there's one spot left that I got open, guys. If you want to book with me, if you want to book a call with me so I can walk you through the super trader formula yourself. Again, there's one spot left for that, for this opening anyway. I don't know when I'm going to open it again, but for this opening anyway, there is one spot left open. So go to johnsstf.com. When you go to johnsstf.com, guys, you can actually then get access to the Super Trader formula, book a time with me, and I'll walk you through it. And then I'll also actually send you some more free training and stuff like that as well to help you out. Samar. Hey, Samar. Time is up. We'll just give it another minute. We'll just give it one more minute, guys. So again, guys, there's actually so much in this, actually in this here. So what you also get in this one here is actually the top 13 mistakes that you are making right now in the markets. That's important for you to stop making. So anyway, guys, so what we want to do is we want to actually I'm going to start to go through these markets out there, because I really believe that there's some incredible things happening right now amongst all these markets and all these charts here. Really, Spagnot? I think not. You've been watching my stuff. It's like, nah, John, what's going on? It's since Christmas. What's happening? There's nothing here. For you guys that are watching the recording, Spagnot just said in the comment section below, you may be able to see it. I haven't heard the trend is your friend until the end very much lately. Well, you know what? If there's anyone that's going to be your friend in these markets, it's not me or the YouTube videos and stuff like that. It's the trend. So, just focus on that, right? Focus on the trend. So let's actually go through this here. We'll start off with the good old stocky market, guys. The good old stocky market, what's happening here. And then we'll get into some other things, Q&A and all that sort of stuff as well, right? So we'll have a lot of fun in this session today. So let's go and have a look at the good old stock market. So a bit of a refresher on what we actually, let me actually do this here. Let me record this as well too. Right, there we go, cool. All right, so a bit of a refresher, guys, on what actually happened, or what did happen, what's happening here on the big picture here, guys. You can see we're just going overall sideways still here. So not really much going on that big picture here sideways, but what is happening here is what? This trend analysis, right? We talked about this yesterday in yesterday's live update, didn't we? We actually said, okay, look what's happening here, guys. The buyers are coming back in strong here. So we could be getting ready for a really big breakout here soon on the stock market. And so when we're looking at that from the stock market perspective, right, we can see what's actually going on here. We see the market's coming back up and the market's come back down, and now we're holding here really strong. So the buyers are coming in back, the buyers are coming back in really, really, really strong through here now. And that's what we're seeing through here. We're seeing the low and we're seeing this higher low through here as well too. So the buyers are coming back in really strong. So we definitely don't want to be fighting that. And by the way, guys, as you can see that there's no indicators on my charts. I normally do trade like this, right? Like this. This is what I trade with. Just one moving average. In fact, most of the time, and private clients you'll know this, most of the time I'm actually just looking at the market like this with no indicators. A big thing, guys, right? A big thing when we're actually trading the markets is what? A big thing is like when we're actually trading the markets, a lot of people and a lot of charts look like this, right? So it looks like this. You got the 1,000 different indicators going on and BB, right? All that sort of stuff. So much going on through here. So the reason why I had this, because this is a layout that I saved, and I used to trade like this a long time ago. And I really got confused. I never had the big problem with trading these indicators, guys, is guess what? It gets you out when there's big moves happening and you're trying to jump in on a move that is a big move, right? Because that's what we're aiming for, right? At the end of the day, what are we doing? We're trying to aim to have those small losses and those big profits. But when we have those big profits and those big moves, guess what happens? We start to get if it's a short signal and it's a big move for a few weeks or more, guess what's going to happen? We're going to start to get freaked out by having the stochastics oversold, the RSI oversold, and they're going to what? They're going to get us out early instead of maximizing that move. And that's what ended up happening to me a lot of times, is that I'll be in a nice trade, but, I'd be in the trade and I'm like, oh, I just made 50% return on that option trade, on that trade there. Beautiful, I'm happy. But the trade kept on running for another 400%, which I could have easily picked up maybe a 300% out of that 400% with a bit of wiggle room there. So this is the reason why I don't use indicators, right? So I use an example here as Siri, right? So Siri was an example of a trade that we took through here, and as you can see, right, look at this here. So as you can see that if you look at this. Notice here. Notice that point right there. Right? Or actually, you know what? No. Look at this here. Look at the RSI getting oversold there. If you were looking at, and this is a trade that me and my private clients took, right? If you were looking at the stochastics and the RSI when this happened, we got in right there, as you can see, right? See this first arrow here? And this is a breakaway bar. That's when we got in. Now, what my chart looked like was this. This is what my chart looked like. So when I got in there, and away we go, right? Down, 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 down. Now, if you're using indicators and you're trying to capture this really big move, which we did, right? We captured this move all the way down. All the way down, we actually captured it. So if we go back to this chart here, then guess what? If I got into here and I saw the stochastics getting oversold here, and at the exact same time the RSI was getting oversold, I actually would not have taken this trade. I'm like, oh my goodness, I can't take this trade. But look at this here. But then the move was an incredible move. This whole move in percent terms dropped about 35% in about 4 weeks. We actually picked up about half of that. Right? Using leveraged instruments and so on and so forth. But the purpose of me bringing that up there, guys, is as you can see, that this is the reason why I don't use indicators, because it actually stops me, it causes me confusion. Like, hang on a minute, I've just got a really good breakaway bar, which actually meets a very simple rules. It says we're now likely to make a big move, but the stochastics are oversold. But look what happened here. As the market continued down, which was a good trade, guess what happened? The stochastics stayed pinned oversold, and so did the RSI as this thing dropped 30+% in 4 weeks. So this is the reason why, guys, I don't use indicators with my trading, especially if you're looking to capture those really nice moves. This here is going to start to like, oh my goodness, oh no, oh my goodness, we're getting to the maximum oversold level on the stochastics and the RSI. Oh my goodness, it's going to turn back up soon and it's going to do this on you, right? And then now, guess what? You jump out of it and then you see this thing go down and down and down and down and down and down and down, down like that. And you're like, why did I jump out of that thing, right? Why did I jump out of that thing? I shouldn't have jumped out of that thing. I should have just let it go. And that's the reason why, guys, when I'm doing my trading really looks like this. The chart, one simple pattern, and I don't care what the indicators are doing. Because if I cared what the indicators are doing, me and my private clients wouldn't have taken this and had a really nice move down. We would have said, oh my goodness, I want to take this, but the stochastics and RSI are oversold, so I can't take it. I'm sorry. And then you miss out on a move like that. So you really want to keep it simple, right? Really, 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 really keep it simple there. Anyway, let's go back to this chart here. And let's go to the good old, back to the stocky market again. And so again, that's the reason why, guys, when you're looking at my charts, a lot of the times I'm just looking at charts like this, because the most important part to me is to keep it simple. And you guys know yourself, right? If you're using indicators, you're getting in at the wrong time. You're not getting into good trades that have good moves, but then you start to get confused. Like, hang on a minute, I'm using the trend analysis technique, but then I'm looking at the stochastics and RSIs, and it creates so much confusion. You know what happens with confusion, right? Again, the big thing for me was when I removed the indicators and I'm not focused on the indicators, I focused on the market itself, what the market was telling me. I removed the confusion, and then it allowed me to actually jump on those trades. And when the market was going to have big moves, I was allowing that to happen by not getting freaked out or confused because of the stochastics overbought and oversold and so on and so forth. So that's a really, really big reason why, guys, why I don't use that anymore. And guess what? My success rate went from like 60+%, maybe 65% using the stochastics and RSIs to over 90% success rate now, and having the ability to maybe having 20-30% of my trades being home run trades. 200%, 300%, 500%, like those type of trades, right? Maybe 20-30% of the trades that I take have that ability. So that's the reason why, guys, if some of you guys are like, oh, John, I don't see any indicators on there. What's the indicator say? It's not about the indicator, it's about the market. What's the market saying? Oh, low and another strong higher low, right? So that's all that matters, is what's the market telling us. And remember, guys, I was actually saying this to my private clients as well too, because I have a group of small clients that we trade together with every day, and they see what I'm doing every day. Now, I was telling them today, I'm like, why is trend analysis so powerful? I was telling them this, right? And I was saying that trend analysis is so powerful because that the trend analysis is showing us what the buyers and sellers are thinking and feeling at the time, right? So when you're reading trend analysis, like for example here, we have a low and we have a higher low, it's actually helping us identify what are the big boys thinking and feeling right now. So right now, as I speak, we have a low and we have a strong higher low so far. So the big boys, what the big boys are thinking and feeling right now, not what you think or what you hope or what the GDP report happened and all this sort of stuff. None of that thinking stuff, but what is stuff, right? The thinking stuff is, well, we're going to go into recession, so it's going to cause a market crash. Okay, cool. That's your thinking stuff, right? Now, by the way, yes, I do believe that thinking stuff is very powerful. If you guys read The Science of Getting Rich, one of the oldest books out there, like with Think and Grow Rich, but Science of Getting Rich, you'll know it's based when you do think about things all the time, it generally comes about. So wrapping that around to the actual markets is that when we think that something's going to affect, we're doing that based off what we think, not what is. What I like to do is like, okay, what is the market doing right now? And so therefore, what are the buyers, the big boys, thinking and feeling right now? That's all that matters, is what is factual, not based off what could happen, based off a thought. What is happening is is the only thing that matters to me. Because that's the only thing I can make decisions off is actually what is happening right now based off the patterns in the markets, right? So by looking at the markets right now, guess what we're having here? We're having a very strong high low. What does that mean? It means the buyers right now, and we talked about this yesterday, right? Right? And then we had this low here. We know that, guess what happened? The buyers ran up, then ran back down to create like a bit of a double bottom. It ran up. Now it's come back down. Now look what's happening. We're starting to push back up higher. So, what does that mean? It means the buyers are so much more eager, what? To come in here. So much more eager to come in here. And so therefore, that tells you that right now there's the buyers are starting to become much more eager in this markets than they have in a long, long time. The market's talking to us right now. Right? And it's based off what is happening. And so therefore that's the best thing for us to do. Not what, and again, a lot of people believe the market's going to crash because you hear the negative recession, GDP reports, bad, right? All this bad news and so on and so forth. But what the most important part is actually what the market is doing. So that's what's going on with the stock market right now. And if I go back to this big long-term picture, which is the weekly charts, look what's happening here. If I squeeze this up, look at this here, guys. Right? Look at all of this sideways movement through here. Hey, look at all that sideways movement. It's resting. Guess what comes next, guys? If it is up, which I do believe it's going to be up, we could see a move back up towards 5.5, maybe even 6,000, probably up to there somewhere. And it could be strong as well too, guys. We could be getting ready for a really strong move for the second half of this year. And it makes no sense to you because you're like, John, how could there be a weak economy and a strong bull market? Remember, the stock market is always forward thinking, forward seeing. Right? So the weakness now is what? Showing us what's the weakness that we've been seeing for the last 12 months in the markets has been showing us what is now actually happening in the market and now happening in the economy. When the stock market will boom 3 to 6 months, maybe more, 9 months. And then and then as that happens, what soon follows? Oh, the economy then starts to 3-6 months later after the market goes up, the economy follows that. Really, really, really important stuff. So what we think is going to be the thing that moves the market is actually the wrong thing, right? The thinking stuff in our mind is going to ruin us all the time. Instead of trading based off what we think, I think that bad news equals stock market crash. Okay, is that based off facts? Or is that based off a thought? Now, maybe the market did crash once the news came out. But is that a good time to buy? If we go have a look at Netflix as an example. Netflix. Look at the daily charts. Look what happened here. Do you know what happened here? This big gap down here. What was that big gap? That big gap was what? It was the worst earnings Netflix has ever had. Bad earnings, bad subscriber rate, bad. Oh my goodness. Netflix is going to crash. It's going to crash. And this is the start of a big move down. That's it. Netflix is done. It's gone. It's all over. Hang on a minute. Right? And then guess what happened? Right? And then guess what happened? Then, as the market crashed, a few weeks later, look what actually happened. We actually have been starting a bull market ever since. But hang on a minute. Just right here, on this day right here, came out one of the worst earnings of Netflix. Changing, blah, 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 stock market down, all that sort of stuff. Oh, you know, big crash in Netflix. Yes, the Netflix had a 30% drop in one day. It's so bad, right? Then look what happened. The market started to pick back up. You see this happen everywhere, right? Look at this here. Even if we go back to Meta. Let's go back to Meta. Look at this gap here. You know what this gap here was? Same sort of thing. Well, look at the gap now. But look at this gap here. Oh my goodness. Oh my goodness, so bad. Bad news, bad this. They lost, what, $100 billion? Well, $100 million or something. I know, a lot of money. On doing the metaverse, and they've been doing this sort of stuff, and Zuck is crazy and he's losing a lot of money, and oh my goodness, the revenue's down, and blah, 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 blah. That's it. It's time. What? When you hear that and then the market's down, oh my goodness, that's it. Facebook done. It's over. Really bad news equals bottom of markets. So we can see this time and time and time again, right? And as you can see, that big flushing effect down here created, look at this move up in Facebook, right? Just an extraordinary quality move. 169% in 6 months. So the purpose of me telling you this, guys, is that all the really bad news that's coming out right now, bad sentiment, bad, equals buy. When you hear really bad, just hear really good time to buy. Really good. Your next door neighbor is a crypto millionaire. My ex-wife, who has nothing to do with the stock market, is asking me, should I get into Bitcoin Cash? Oh my goodness, that's the top of the markets. Right? So I hope you can see, guys, that what we think about the markets is wrong. And that's where we're probably likely to see a really good move up from here, because there is just so much bad, really bad, really good time to buy. So let's go have a look at the good old Dow Jones. Look at the Dow Jones breakout. Oh, I wouldn't really say that's a big breakout there. Not much there. Actually, we probably do have something like that going on, don't we? Yeah, like that, and then like that. But look what's happening here with the Dow Jones, right? What are we doing? Big, higher, low. Dow Jones is strong like bull. Right, big, higher, low. So looking at this here, the Dow Jones has a really high probability chance now of starting to see, especially this major, look at this here, low and a significant low, higher low. We break this level through here, guys. That level there. Guess where we're going? We're probably going to make a really extraordinary quality move to the upside. And I know that makes no sense, but guess what? That's why 95% of people out there don't do well out of trading, right? Because it confuses the hell out of you. Hang on a minute. How could there be so bad news and all the bad and the market go up? How does that make sense? What am I doing wrong here? But good higher low. Good higher low. Let's go to the good old NASDAQ. And the NASDAQ, guess what? NASDAQ, same sort of thing. Let's see. Look at the NASDAQ. The NASDAQ is strong like bull, guys. Strong like bull. The NASDAQ's one of those markets, guys. It's quite big. So if we have a look at this here, let me take everything off the screen when it comes to the good old NASDAQ. And let's actually see where the NASDAQ could be heading towards. So that was the major level of support through there. I know this sounds crazy, but hey, it's just possibly a bit of a channel. Let's actually connect the highs through there. We've had a move up. How much was that move here? I'm pretty sure it reached the I'm pretty sure it reached the banana. It did reach the banana. All right, look at that there. 50 to 60% retracement and held this level through here. Now that we're moving back up. So we could be, this whole NASDAQ chart could be getting ready for another big move as well too. It's had a much bigger pullback than the other markets, so the NASDAQ could be getting ready for quite a big move. Now, obviously, guys, a lot of this has got to do with interest rates as well too. Looking at the actual stock market, so that tells me that the interest rates, long-term interest rates, are probably going to start to come down. Now, if you guys are smart with what I just said there, the long-term interest rates are probably going to start to come down real soon. They've been flattening out, but they're probably going to start to drop real soon. You would know how to take advantage of that if you've been trading for a while. Me and my private clients are already in positions ready for that to happen, by the way. So as the interest rates go down, there's things we can start to look at to potentially trade or invest in for a while, for a few years, as that starts to unfold. So we can see through there that, again, this good old NASDAQ chart is really starting to compress to the upside. And it looks like we're about to get a bit of a breakout, strong breakout. We get that strong breakout, guys, on the NASDAQ, which looks like it's starting right now. We could see at least a move back up towards the 13,000. Right? So that's what I'm looking at there on the overall markets, guys. Again, this market is strong like bull. Don't fight it. Don't fight it. Don't fight it. It's an upward trend. Right? Upward trend. Look, let's just do that through. Strong upward trend right now. And if you're a trader of these markets, guess what? This is the only thing that's most important. Strong higher low. What I mean by strong is that there's the low there. Then it made a strong higher low there. Then it made even a stronger higher low, and then I'm probably going to get a breakout. So get ready for a strong bull. Probably next week's going to be a really, really, really strong bull market. Here we go. Haha. Thomas Sally, I just saw that. Hey, John. Hey, banana man. Banana man. Banana lovers. Oh, hey, banana lovers. I did just have another banana just before I started this session as well too. It's my pre-workout before I get to go to the session there. Right? So that's what's happening right now, guys, right? Don't fight the market. Keep it really simple, guys. And do you notice what I'm doing here? It's all based off what? What the market is telling me. Not, well, let's check out the MACD. See what the MACD... No. No. Well, let's check out the Williams percent. Well, let's check out the Bollinger Bands. Well, no... Hang on a minute. All right. You keep going. I'm going to send you 2 kilos of bananas. You keep going with that. That's it. 2 kilos of bananas you're going to get. Actually, you know what? Actually, I shouldn't say that because now I'm going to get a whole lot of people in the chat box give me a whole bunch of shit. It's like, send me the bananas, John. Send me the bananas. So maybe I'll start like a World War III in the chat box below. So... I'm going to send you a cookie, right? I'm going to send you one of those cookies that makes you hallucinate and, think all kinds of crazy things. That's like, guys, a bit of an update across the markets. Oh, by the way, guys, if you do need some help, guys, grab that free trading course, link in the description, johnsfreegift.com. It's like 4 or 5 hours long, guys, and it walks you through the biggest mistakes you make in the chart reading techniques, the trading systems, all that sort of stuff. And if you do want to get more like one-on-one help, then go to that John's STF, the Super Trader Formula, get access to that, and then you'll be able to book a call with me personally. And I've got 1 spot left for that actually, where I'm happy to personally walk you through the Super Trader Formula and help you insert that into your life, so you can actually have a bit more of a formula and a roadmap to help you move forward. And again, I'm doing that for free. 1 spot left. So that's what I wanted to share with you there, guys, when it comes to the stock market. Let's go have a look at gold and silver. And these gold and silver markets are looking really, 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 really good. Gold is doing exactly what I thought it was going to do, which is just this sideways movement through here. Continue to go sideways through here, but I do believe gold is getting ready for really big, solid moves. And I don't know why, guys, but people are still not focusing on gold market, and they're still focused on the crypto market. They're crypto. I spoke to someone yesterday and he was like crypto mad. Like, I want to trade crypto. I'm buying crypto because we're going to go for the next big move. And it's like, it's not. Crypto is done, guys. Crypto is done. Right? Come back in 10 years for the next crypto boom. Crypto is done. There's so many more other amazing markets out there that you can trade if you want to buy and hold for 5 or 10 years. Instead of trying to wishing and hoping and praying for the next big bull market and the halving cycle and blah, 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 blah. No. There's many other markets out there, guys, that are going to see one of the greatest super cycle booms we've ever seen in history. There's really big cycles that are happening for the next 2 years, and I gave you guys a bit of a hint of that just a minute ago. I'm not going to directly tell you that. That's obviously what people invest with me for, right? That I tell them that. But I actually gave you a bit of a hint if you listened to me for the last 10 minutes. for the next 2 years, but then also for the next 7, 8 years, right? Never 6, 7, 8, maybe 10 years. There is massive cycles that are happening based on cycles and based off history repeating that says the puck is likely to be producing this over the next 8 years. And when that happens, we are going to produce one of the biggest super cycle booms we've ever seen in history. So why would you want to play in cryptos when it's already had its boom and bust cycle? Why wouldn't you want to go say, okay, cool. This is the biggest market out there. That's probably going to make, you think the crypto bubble's big. You think the crypto's bubble big. Come back to me in 5 years time frame and then we'll see. Because there is one market out there right now, guys, that is going to trump that massively. Absolutely massively. And it's nothing to do with the crypto market. That has had its day, right? That dog is tired, right? It's tired. It was just injected with all caffeine and pre-workout, and it just kept going and little sleep and pushed and pushed and pushed and pushed and had more caffeine and very little sleep. And then that dog crashed. It just kept sleeping and sleeping and sleeping. And even after a few days of sleeping or a week or two of sleeping, that dog is still absolutely shot. The central nervous system, he's sick. He needs some time to rest. He needs to shake out the cobwebs. He needs to shake it out for a while. That's what's happening with the crypto market. Let it shake it out. All right? There is other markets out there that we can say, oh, here we go. And again, what I'm talking about here, guys, is not as individual stock. But what I'm talking about is just looking at simple cycle analysis, which is what hasn't done good for the last 10 years is probably going to do good for the next 10 years. Let's just keep it as simple as that. If you actually look at your lifetime, what actually happens in booms and busts? Property market, so on and so forth. We have a boom and bust property boom, right? 2007, 2008, property crash. Guess what? 4 or 5 years later, 2012, 2013, guess what? Maybe 2014, guess what happened to the property market? Then it started to pick back up again. Oh, right? So there's so many other markets out there if you're looking to invest in the markets, okay? So look at things, history repeating itself, look at cycles, and then there's many markets out there. But looking at gold right now, gold looks like it's just about to continue sideways and they have a really big, strong breakout here. But gold is in a very, very, very strong high, or then low, higher low. So we're probably going to get something like that. And then away we go again, looking at the good old gold market through there. Looking at the silver market right now, guys. Same for the silver market. We're actually at the top of this channel, but we also do have that going on through there. So we go through to here. And we go through to, I think that'll be it there. Maybe let's actually do it from that point through there. And then we go to that point through there. Something like that, yeah. So anyway, so looking at a silver here, we're going sideways. Once we get a big strong breakout, guys, Mr. Santa came early. The big belly, the big belly red man, big red belly. Big belly red man. He came early. So that's what we're looking at through there, guys. There's a bit of an update across the markets through there. Let me go now answer some questions for you guys. Just remember, guys, keep it simple. Keep your trading simple, guys. You don't have to complicate things, okay? It doesn't have to be complicated. I promise you guys, like when you simplify the way you trade the markets, and you have just a really simple, powerful patterns, you can get a high win-loss ratio and most of the time make a profit. You're still going to have your losses, right? But we can keep those small. And it's just really, really, really simple. Let's not complicate it, right? We don't have to, let's keep it like, remember guys, there's a 50-50 chance of doing well out of the markets. You just overlay one of my 5 rules, which is what? Simple trend analysis. What I've been talking here about simple trend analysis, highs and lows, and what the buyers are thinking and feeling at the time. Because remember, the big boys push this market around, not me, not anyone else. right? As the big boys. So we're seeing the footprints of what the big boys are thinking and feeling. And when you start to apply just simple trend analysis, you can improve your success rate to 60, 70%. But then that's the reason why my system is so highly successful, right? Because it has 5 rules, and rule number 1 is actually the trend analysis. And then we have rule number 2, 3, 4, and 5. And the only indicator that I use is the 52 moving average, 52 on the daily charts. But most of the time, even today, guys, we're looking at the markets and we're looking at setups of trades that are coming up, and all we're doing was looking at the market like this. Let's just bring up Meta up here. Right? We're just looking at the market like this. Just a blank chart and volume. Because there's so much power in that. There really, really is. Let's simplify and guess what, guys? When you simplify the trading, your success rate goes up, more money goes up, less trades happen. So you're not over trading, you're not getting stressed out, you're not confused, and you actually end up doing so much better as well too. That's the reason why, guys, when you start to lay these things, you can get an 80, 90+% success rate. And look at this here. And for people that don't realize this, guys, I had a testimonial recently said to me, here's a guy here that learned some of my stuff that I teach him about the trading system that I use. And look at this here. I had 13 trades, had 11 wins, 1 loss, 1 break even, 92.3% success rate. My count is up 102%. Now, I'm not saying you're going to do the same thing, guys, right? I'm not saying you're going to do the same thing. It was only on a small account. He was trading foreign exchange markets using my system. But my system that I trade, it works on every market out there. But I'm just saying, guys, like, here's proof from a testimonial that I got that you can get over a 90% success rate if you know what you're doing. So that's what it's all about. And if you'd like to learn more about that, then again, book a call with me, guys. I'll be happy to help you. Again, go to John's STF, Super Trader Formula. There's 1 spot left. When you book that, I'll personally call you and walk you through the Super Trader Formula personally. And then I'll be happy to help you out even more with that. So, the market is overbought. I hope for a pullback because I am only half invested in stocks. Peter 1977. Right now, the stock market looks very, 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 very strong, my man. Very strong. So, looking at that, we probably have something going on through there. Let's extend that, right? So on a short-term basis on the S&P 500, we actually have that going on through there. And we also have this resistance going on through here. So this is very, 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 very strong right now, 1970. Peter. But just remember too, Peter, right? Like, you don't have to be chasing the market all the time, right? Sometimes it's good just to be patient. But what's probably going to happen is that this is probably going to be a big breakout. We're going to see probably really big moves to the upside. But it may not work out like that as well too. You may get a big, this may be just a little bit of a fake out before we get some form of much more of a pullback before we see that next upward move. The next one here, I would say it's probably through there. Again, let's extend this right. Right, so that'll be the Dow Jones. So probably use that sort of trend line through there. Let's look at the Nasdaq. Again, I'm just using the short-term trend lines here, looking at this here. So I'll probably go from this point here, because that's that low point. Again, I just want to extend that to the right because that's probably going to come into fashion here. We also have on the short-term basis strong level of resistance through here as well. So we're right at that level of resistance. So, but again, we get this very, 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 very strong higher low through here. So that's obviously on the stock market through there. Again, guys, what am I doing here, right? Simple charting analysis. And most of this is just looking at the trend, right? What's the trend? What's the trend? What's the trend? Because remember, guys, when we start to identify a good, strong trend, we're identifying that the buyers are really liking these markets. And so therefore, guess what? We're piggyback off the big boys. Where most of us say, the big boys are buying this market up, but it's going to crash anyway. Let's go short. You're going against the big boys. No, do not go against the big boys. Go with them, right? Go have lunch with them. Talk to them. Say, hey, you're my friend. Come here. TD Ameritrade or E-Trade to trade stocks for beginners. TD Ameritrade has Thinkorswim platform, which is nice. I don't think there's any real major platform out there for beginners when it comes to the trading platform. spag not, the most important thing for you, right, is not the actual trading platform or the broker. What is the most important thing? What actually goes into a high quality setup in the markets, right? That's the most important thing. Because if we don't have that, then guess what? We can have the best broker in town, but if we actually don't know what a good trade goes in, what we're actually looking for in a good setup, then how do you know you actually have a good trade if you don't know what you're looking for? Makes sense, right? Because most people are just like, I'm just looking for anything that looks good. Where me, I know what a good setup looks like, so I go to the market looking for that, right? Because I know that's what I'm looking for. John, can you please give me your analysis on PINS? Sure. PINS. Oh, Pinterest. I entered a short trade today based on what I've learned from you. Really? That's not what you learnt from me. Just wondering if I'm on the right track. Jamison? Well, I always say the trend is your friend until the end. And what I can see here is actually there's no trend. And if you are entering just based off trend analysis only, which again, there is no trend, because we have like, look at this here. We have like down, lower high, lower low, up, down, up, sideways, and then big gap down. Right? There's more like a double top formation through here. So you enter the trade based off what I said. Remember, when I trade, Jemison, when I trade based off 5 rules. And rule number 1 is trend. What is trend? Trend is lower highs and lower lows. That's what we want to see. There is no lower high and lower low here. Now, yeah, there's a possibility of it actually going down, but to me, there is no trade setup for me personally, right? Because the first rule out of the 5 rules that I use, which is trend, which is what? I'm looking for a lower high in a short trade. We don't actually have that. So very, very, very risky trade. So you definitely didn't learn that from me. Because rule number 1 is trend. And we don't even actually have a trend in place. It's like, I'm not too quite sure. And on top of that, look at all that level of support level through there. Major level of support. And then just below it as well too, just below there, you've got all of these major level of support levels. So no trend, major support level. Again, for me personally, and you may have be something else. But again, when I'm entering a trade, I'm entering based off 5 rules. And my rule number 1 is actually trend. I need to be trading with some sort of strong trend. And we actually don't have that through there. So no trade. No trade for me anyway. Maybe trade for you. I have some call options on the S&P 500 strike price 55 running till the end of this year. Whoa. Peter 1977. Did you do that based off David Hunter? Come on, being honest. Did you really do that based off that? Oh, he said it's going to happen to the next 6 months. Here we go, right? Just be careful. David Hunter, while I believe what he says is true, he's been saying the 3 to 6 month mark for the last 3 to 6 years. I believe what he says is true, by the way. But remember, it's all based on the market. Right? But I do believe what he says is true and is going to happen. Just the timing is a factor. So, by 5,500, why so far out? Big, big, big mistake. Because yes, we may get to 5,500, but it may not be to middle of next year. Right? We may get something like this instead. A breakout to up here to 4,800, then down to the middle of this year. You know, or maybe sideways through there, maybe towards the end of this year, and then it starts doing something like that, and then maybe you have something like that. So 5,500 call options. Holy dooly. Hey, John. Thanks, John. FOMC meeting Wednesday and rate hike already priced in. Maybe. Speaking of gaps, I am still sharpening and learning trading in your options /experience John, gaps are always expected to be filled. That's the, even if it's years, I am just interested. Yeah, that's what they say, right? That's what they say. They can get filled. They generally do say that, and most gaps do get filled. You know, like if you look at Netflix and FLX, they generally do get filled in the markets, right? But just how long, we just don't know. So, for example, Netflix has still got a massive gap left open that's been up here, and it may not be another 12 months before that happens. So the thesis is correct, but we never want to make a decision based off that. Oh, the market's going up. It's going to come up. Oh, here we go. The market's rallying to close the gap. Do you know how many times I've made that dumbass mistake? Oh my goodness, here we go. The market's starting an upward trend. I'm going to go long because it's going to close the gap. And then it never does. It does this on ya. It does this on ya. This on ya. Adesanya. What? Did you guys watch that? Did you guys watch that Adesanya fight for you UFC fans? Oh my goodness. That Adesanya fight, was it round 2 or round 3, the knockout? Oh, Adesanya. The man. Right? So here we go. Market's going up. Here we go. We're going to come and close the gap. Here we go. And then the market does that on you. You're like, what? What is that all about? What's that all about? Hang on a minute. That doesn't make sense. Because we think, oh, gaps get filled, so therefore it's going to come up and close the gap. Do you know how many times I've done that and then I had to learn my lesson the hard way? I think I've lost 3 or 4 years of my biologically life by doing that. Now, because guess what? But what is that? Let's actually circle back to what I just said there. I think that the gap is going to get filled very soon. So therefore, I'm going to trade based off what I think. No thinking. Firstly, what exactly are you looking for in a good quality setup? One thing, not 100 things, one thing. What are you actually looking for in a high quality setup? What does it look like? What's the entry candle? And how do you manage that? Risk management, trade management, stuff like that. That's the system, right? That's a trading system. Now, once you have that, let's go to the market and find it. So for me personally, I don't have a trading plan that says the market's rallying up and it's getting close to filling a gap, so go long. That's not my trading plan. Now, if you want to be part of the top percent of people who actually do well out of the market, if you actually want to model success, then what do the successful traders have? They have their patterns, or at least one pattern, and a trading system wrapped around that, which simply means they know exactly when they're getting in, how they're going to manage the risk, manage the trade, and so on and so forth. Let their profits run, cut the losses short, so on and so forth. Right? They know that sort of stuff. If you actually want to be part of the top percent, part of the top percent of people who actually do well out of trading, your foundation is, okay, I'm not going to trade based off what I think. Well, I think this is going to do this. This is a nice setup because it meets my trading rules. And a bit of a hint, guys, I look for the same thing day in, day out. It's nothing new to me. It's the same thing day in and day out. So I hope that makes sense there for you guys. Let's go to here. Big pullback is coming. Are you crazy? Who will pay this high valuation? It didn't stay in low interest. Well, Dash Man DM, my man, remember, that's what you think, right? You're thinking. Again, smack. My nan used to give me the feather duster when I was younger. Did you guys used to get the feather duster? And I'm not talking about the soft end. My nan used to hold the soft end and whack me with the hard end. And my dad used to give me the kettle cord and all that sort of stuff as well too, because I was a brat of a kid, right? It's like, you're a brat of a kid. Like, I know. I almost got the cane. From year 5 to year 6, this is how much of a brat of a kid I was. From year 5, left school at year 5 and I went to a new school at year 6. First day of year 6, I punched a kid out and told the teacher where to go. By second or third day, I almost got the cane at that school. I was a brat of a kid. So the thing is, like, it doesn't matter, right? It doesn't matter what you think. Who's going to pay these high valuations, blah, 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 right? Remember, valuations have actually come down a lot since the market has crashed. So you're thinking again, right? Think. So therefore, what do? Oh, this is what the market is telling me, not what my ego or my mind says or what I think is going to happen. Because remember, guys, when we remember, are you trading based off proven factual evidence or what you think? Remember, you've got to be honest with yourself here. If we enter the market, is this based off what we think is going to happen? And it's not backed off based factual evidence? Because when I'm trading and I trade a powerful pattern, I know most of the time it's going to be a nice setup. Everyone load up on FRC. FRC. Really? Yep. The trend is your friend until the end. There's real good support at 0 and it looks like it's about to get there. Thank you, John. Any thoughts on SOFI? So let's have a look at here. SOFI. No thoughts, actually. No thoughts. No one in control. Nothing really going on here. It's a 50-50 type of bet, right? 50-50 type of bet. And next one here, CVS. CVS. Down. Massive trend is down. Stock market is down. Trend is down. So at this point in time, it is down. And so therefore, the fact is that the sellers, the people who are trading and investing into this market here, are down. If you're trying to buy it now, you are gambling, you are hoping, you're wishing, and you're going to be 80% wrong. Right? 80% wrong. Oh, it's at support level. Buy it now. 80% wrong. Buy it now. It's at support level. It rallies up, come back down. Oh, buy it now. Oh, yeah. Oh, no. Okay, we're going to buy it here. Okay, cool. We're going to buy it here. The market goes sideways. It comes, but buy it here. Market, and what is the market doing? The market's saying, oh, okay. This is what the market's doing. Down. Wait for it to turn around first and then look at that, okay? Because this could be, looking at this here, it's just broke a key level of major resistance through there and it's holding through there. Next major support level is down possibly through there somewhere, I would say. So this is actually not looking too good. Just give me 10 seconds, guys. Give me 10 seconds. Alrighty, I'm back. Okay, let's actually have a look here. So, thank you, Mr. Pickle. Why do you think we will have a big breakout? The rally is from mega cap tech stocks, which are severely overvalued. Really? What? Just because it's overvalued doesn't mean we can't go. We can't become even more overvalued. Is that what you're saying? That's it. It's overvalued. We can't go up anymore. Really? Okay. I've seen many times where the market just keeps going up and up and up and the valuations keep going up and up and up. I've seen the debt bubble get bigger and bigger and bigger and people say it can't keep getting bigger and it keeps getting bigger and bigger and bigger and people say they can't get any bigger and it keeps getting bigger and bigger and bigger and we can't. It says, right? So again, is that based off, is that what you think? Oh, well, they're massively, severely overvalued. They can't go up anymore. That's it. No, that's it. Down from here. Upside seem limited to me and downside's huge a risk. Again, What is the tech stock saying? Oh, tech stocks are saying that, if you're looking at, you're saying the mega tech stocks. Well, unfortunately, the mega tech stocks actually had almost a 40% drop. So I don't think that they're severely overvalued. No, nowhere near it. They may have been back at the top here, right, back in 2022. But the thing is like, if they're severely overvalued now, the tech stocks, what were they back here? What, massively, severely, extraordinarily overvalued and they can't go any higher? Who says we can't? Who says we can't actually go back up to those levels again? Interesting, right? We just got to ask ourselves those questions because anything is possible. Remember, we've already had a very big pullback, so a lot of the valuations have come down a lot. Look at the weekly chart on PINS. Again, nothing here. Like when you say look at the weekly chart, yeah, and I'm not sure when you're saying look at the weekly charts. Jemison. Yes, you had a bit of an upward movement from here and we are breaking down, but again, I'm not sure what you mean by looking at the weekly charts. Because we were in a bit of a slight upward trend from here and then now we're breaking down. So again, I'm not sure what you're trading based off, but if you're trading based off one rule that I use, which is not even intact right now, that's, again, you're trading based off what you think is going to happen, which is not a good idea. But when looking at the weekly, that was actually the daily charts. When looking at the weekly charts, you're saying, oh, but it's down and it's cross, and now we're breaking down. Okay, yeah, you could be right as well too. Right, you could be right. But again, as I said to you before, from that level there to even that level through there, look at all that major level of support levels through there. And remember, we're not trading. We don't trade off the weekly charts, do we? We may look at some trend analysis on the weekly charts, but we don't trade off that, do we? No, we trade off the daily charts. And the daily charts say no trend. E-Trade is good, more buyers than sellers. 190. FRC was a joke. Oh, okay. Well, there is Jemison. There is good support at 0, so that's okay. You should buy it there. That's a good buy level. Apple pre-earnings, way up. Cost, tails, or horse? Or horse. Apple. Let's have a look at Apple. Where is Apple? Did Apple's earnings already come out, guys? Let's have a look here. Let's have a look here. Oh, no, earnings hasn't even come out yet. What are you talking about? Pre-earnings. Hasn't even come out yet. Don't jump the gun. We've still got a couple more days left. Why don't you use any indicators or divergences in determining breakouts or failures? Ron Walker, a very good TA expert, says multiple negative divergences are appearing in the resistance levels. Yeah, so Kevin, if you listen to, if you're probably late here, but so what? There's negative divergence. Are you saying just because there's negative divergence that we can't keep going with the trend? Okay. Remember Kevin too, right? Remember this here. When we get good strong breakouts and very big runs, what's going to happen to the indicators? If we have a good bullish breakout and that good bullish breakout is a start of a really big breakout, guess what's going to happen to the indicators? We're going to be oversold, right? We're going to start to get those negative divergences and potentially oversold and all that sort of stuff. Just because the indicators are oversold or giving us negative divergence doesn't mean it's going to play out. Now, on the flip side, remember, what is our aim here, guys? Our aim is what? We want to be trying to trade the markets in a way that's going to give us high probability, and also the ability to cut our losses short, and also be in a situation that's going to allow our profits run, so we can potentially even 20-30% of our trades we take be those really big profits, right? Because that's what's going to make the differences in our account at the end of the year. We cannot be in a trade for 3 or 4 or 5 or 6 weeks while we're having big moves if we're looking at indicators. Because you'll do a bit of a nugget in your pants probably the first week, because now big breakout to the upside and away we go, and the indicators start to become oversold. You know, all these indicators oversold, and you do a nugget in your pants and you get out, and then the thing keeps running on for 2 or 3 weeks. So again, Kevin, where I'm coming from is this, okay? We need to model success. Model people who actually trade the markets every day, all right? And look at this thing. I've been trading the markets now myself, and I invest in these markets every day myself for 19 years. What I'm saying is that I have learned myself, and if you are using indicators and you do have a strict black and white trading plan that actually is working for you, then stick with it. But if you are not, if you're just looking for that next quick tip to look for a good trading setup, that's not what it's about. What? That's not what it's about. So why would I want to add indicators to a system that gets me over 90% success rate? And why would I want to add something else, confusion, to a system that sometimes when I do get into a trade, I'm going to be in the trade for 3 or 4 or 5 weeks and give me multiple hundreds of percent return, 3, 4, 500% return, and sometimes even up to 1,000% return. I had I think maybe even 2 trades last year that made over 1,000% return in over 4 weeks. Why would I want to add more stuff to something that's working already? It's just we don't need all these indicators to make good decisions in the markets. Remember, we have a 50-50 chance straight away. You start to overlay strong, good foundations of trend analysis. What is the actual trend of the market at the time? You increase it to 60-70%. You start to overlay it with some more strict rules. It's not that complicated, guys. It really isn't. We don't need to complicate things. Whew, look at that. Because we think, right, we think we need all these indicators, don't we? It's like, oh, we need these indicators to make good decisions. Really? Do we? Really? Short covering at the end of the month. Well, it's the end of the month now, and I don't see any short covering. Oh, actually, you may be right, should I say. Money looming for place, momentum, price, and truth. Oh, jeez. Kevin, my man. Thank you, John. I agree with you. SOFI still has SOFI and CVS. I am still watching CVS till have confirmation, probably after upcoming trend. You have seen overvalued companies get significant more overvalued in low interest rates environment, blah, blah, blah. Bubbles here. Okay, cool. Nvidia, blah, blah, blah. Negative interest rates. Also, if you look at, okay, cool. Kevin, all I'm saying is this, okay, Kevin? It's not about me being right or wrong. What I do know is this, okay? If you are trading based off what you're doing there right now, let's just say, okay, cool. Let's just say you're right. Oh my goodness, stocks are overvalued. They can't keep going up anymore. I'm shorting the crap out of this market. I'm going to make $1 million. Okay, fantastic. You made $1 million off that one call. Now, I want you to go repeat that, what you just did, for the rest of your life every year so you can feed your family. Oh, wait, sorry. You can't, because that was just waste off just one thing that happened in the markets. Oh my goodness, how do we actually go repeat that? That's what I'm talking about, Kevin. What you're using here is just a once-off thing and not based off solid foundations, because the way that I trade and have traded for a long time is it works every year without fail, is that I know that I can stick to my system and just trade that throughout the year and make money every single year from trading. My job is just to be disciplined and patient with it. So I don't care what you're doing once in a while, Kevin. All I care about is what's the repeatable process that you can do. Right? And so just remember, Kevin, too, right? Just remember that the market can do the opposite to what you think it can't do. So don't be so biased in the markets. And remember, at the end of the day, the markets, which is the big boys, right? The markets, which is the big boys who are creating the patterns in these markets, right now, in this very moment, the fact is, right, not what you think was going to happen down the road, but the fact is, right now, the market is in a strong upward trend. And until that ends, we are likely to continue higher. The market, remember, the big boys are creating these patterns, the footprints. And our job is what? To follow along with those footprints. Yes, but buying at the top of the range, hoping for a breakout, is one of the riskiest things you can do. You know what, Kevin? You may be right. But remember, Kevin, I didn't say that, did I? I didn't say buy the market right now, did I? No. No. What did I say? You need to actually have a proven pattern, a proven system for when entering the markets, not just buying it now because it's going to break out. No. I'm just using simple technical analysis right now to read what the market's telling me. I'm not saying buy the market right now. Why? Because when you buy the market, are you buying the market based off what you think is going to happen, or based off factual evidence that this system that you're about to, this trade you're getting right now, is based off the system that you trade every single day, every single time, week after week, month after month, year after year, and just like clockwork, repeatable, it produces a good income for you, as the months and years kick on for you. So at the end of every year, you can look back and say, I've had a very successful year this year. That's what I'm saying. Not just, whoa, look at a break resistance, buy it. No. Not me. What you're looking at right now is what? I'm just looking at the trend analysis here. So that's all that matters, Kevin, right? That's all that matters is, but at the end of the day, Kevin, guess what? If you're trading the markets right now and you're being really successful at it, and you actually have a system right now and you're successful at it, well, you obviously don't need my help. You don't need anyone else's, right? You don't need Ron Walker's help. You don't need Johnny Howe's help, right? All I do say is that what you think the market can't do, it's probably going to do. So never say never. And the bottom line is this: when the market starts an upward trend, that's the only thing that is factual, that is actually happening, that the big boys are telling you right now. And anything else is just opinion. Again, Kevin, you're talking about or also don't underestimate the power of selling May and go away. Really? I'll tell you right now, selling May and go away. Hang on a minute. That may or may not be true. Again, you're using what is that? So Kevin, what you're doing right now is you're trying to find whatever you can to support what you're looking at. You must be short the market right now, because you are finding all these reasons why you're going to be right. Confirmation bias, when the market, which is the only thing we should be focusing on, not me or what you think, selling may go away, high valuations, blah, blah. You must be short the market right now because you're so biased of this market dropping. But the market's in an upward trend. Don't fight it. Now, if the market starts to turn into a downward trend, yeah, you could be right, and then we go with it, right? But never fight the market. The market will rip your face off every time. Don't fight it. But hey, come back to me in a few weeks time frame, because you're probably short right now, and then you'll be able to say, yes, John, I know, I got half my face ripped off. I should have listened to you. Alrighty, guys. Well, that is it for me today. What a great conversation with me and Kevin, eh? What a great conversation between us two. Traders, just keep it simple. Keep it really, 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 really simple, guys. And you can guys do so well out of trading. Again, guys, it's not about your opinions or your thoughts or anything like that. It's all about just based off simple systems. You don't have to be smart, right? It's not about you being smart or clever. It's just about having again, guys, when I'm trading the markets every day, I'm just trading the same thing every day. Like, it's not about, well, I think this is going to go up. No, like, is this the trading pattern that I trade? Yes or no? No, it's not, so I don't trade it. Yes, I am short, and I will tell you when the market goes down within the next few months. Oh, wow. So you're short in an upward trend. Rule number 1, the trend is your friend. Rule number 2, never fight the markets. Rule number 3, why do people do that for? When the market's in a strong upward trend and we're actually making higher lows, where the market's telling us right now, we're actually in a strong upward movement right now, and we're going to try to fight the market. You're going to try to fight the big boys who are actually telling you what's going on right now as we speak. Okay, cool. Alrighty, guys. Have a great weekend, my fellow YouTubers. Again, guys, if you do need some help, grab that free trading course, link in the description, or if you want to grab that last spot to the Super Trader Formula, second link in the description, click on that, guys, and I'll speak to you real soon.